Good morning, Bill Riley with Riley Private Client. I'm going to kind of break the trend a little bit and get on my soapbox about some things that I think as investors we need to be looking at and paying attention to, whether you're going to invest in it or not. You know, about almost 3.5, 4 years ago, I wrote a book called 40 Years of Investor Mistakes. Of course, this was before crypto. It was after the 2008. And in the book, I tell about real life stories about investors and people that I advised and how they made some critical mistakes that they shouldn't have done. Well, I think part 2 is coming out pretty darn fast, because there's a lot more stories coming out. So what we're going to talk about today, and this is a thing I get from a guy that I know, and he works for another big firm up in the Northeast, Ben Carlson. You know, the last couple of weeks have been an absolute bloodbath for cryptocurrencies. From the highs of just a few short weeks ago, Bitcoin is now down almost 50%. Ethereum is off almost 60%. And at one point yesterday, hundreds of billions of dollars were lost in a matter of hours. And this is not new to me. I saw this happen in the tech wreck of 2000. We saw it in 2008. I mean, I was around in 1987 when the real estate things crashed and the banking got in trouble. So here's 4 lessons. You have to stay in the game to survive as an investor. What that means, trying to jump in and out, no matter what you're investing in, can cause a lot of damage to your portfolios. The last place you want to find yourself as an investor is being put in the position of being a forced seller. Now, there are 2 types of forced sellers. Those who have to sell because it's panic. They're scared, they don't understand what's going on. They probably didn't even understand what they invested in the first place. So when we start getting this volatility, their only exit is out. And this is ingrained in our brain. You know, I have a certificate in behavioral finance and also minored in psychology. And this is, the fleeing thing. If you're standing out like a caveman, all of a sudden a saber-toothed tiger comes up, you don't sit there and challenge him, you run. Well, that's exactly what happens in the market. Now, the other one is too much leverage. And this is the one I'm going to spend some time on. Most people understand you got to stay invested to make any money. And trying to jump in and out is a fool's game. But this leverage thing is really bothering me. I've had clients call me, and I've had other people that are wanting to be clients, wanting to know if I could put together an account where they could borrow on their stocks to buy cryptocurrencies. And you have to kind of stop and think about that. So you're borrowing on your portfolio that if it went down, you would get a margin call, to put it into something that is extremely high risk. This is what forced some of the selling. Because if you borrowed on the account and then you used that money on the cryptocurrencies and they dropped, you were selling out of both hands. Not a good thing. There's always going to be investors who will liquidate their risk assets at the worst possible time. How many people around March the 20th of last year jumped out of the market because they thought the whole world was going to die of a bad flu, really, after we found out what it was? It is a serious illness. But we solved it, and solved it very, very fast. And the turnaround in the markets was amazing, and it's still amazing me. But if you got out, it's very hard to get back in psychologically, and it's almost impossible to time it. So, in essence, these investors became forced sellers because they took more risk than they could handle. That's one of the things we do here, is we run what we call Riskalyze, a risk analysis of your portfolio, and we're going to tell you right up front. If this happens, your account could fall by 8 to 10%. Can you handle that? Most people can. But if I showed you one that said, we had one in the other day, could drop 25%, that's where you need to talk. And you need to look at it and say, can I really take that? You get a good upside if everything works, but you get a horrible downside when it goes the other way. Everybody's heard about Arbacos, which they call the hedge fund guy. His name is Bill Hong. He turned $20 million into $20 billion by using what I could not understand with all my experience, leverage on assets. It was amazing, and he did it through about 10 or 12 top firms. They allowed him to do it. Now, I'm sure the SEC is really getting into that one. He then turned $20 billion to almost basically zero because the leverage didn't work. Once it starts going down and you've got leverage, they force you to sell out. As a branch manager in my old days, I remember the tech wreck where people were in 2000 where they'd borrow money to buy stocks, or they liked it, they said, can I get a loan through my account and buy more? Well, when those dot-com stocks started dropping, my job was to call the clients and say, you got to come up with about 40 to 50 grand by 3 o'clock or I have to sell you out. That's the agreement. I felt like Tony Soprano some days because it was bad. And they didn't have the money. They borrowed the money to put it in, but they didn't have the cash available. So they had to sell out. So you got a double whammy. Now, making money in the short term is great, but it's useless if you can't keep it. I mean, I don't know how many times when we have a prospect come in, I talk to him about his investment, ask him how he did. Oh, I made such and such in year such and such. I said, well, where are you now? Well, that's why I'm here. It didn't work out the way I thought. And that's the problem. If you're going to make it, figure out a way to keep it, especially as you approach your retirement years. And I don't think right now, even though the cryptocurrencies could eventually evolve into something, would be the proper investment if you don't have a whole lot of money and that money is designated to lose. Now, there's a website out there that actually tracks the volume of cryptos dollar-wise, real dollars, not crypto dollars, going in and out of this market. Since April the 17th, there has been more than 42 billion of levered long crypto money liquidated. That's why you see the selling, because selling begets selling begets selling. And it's a margin call. What you need to do, and then the next thing is that during these crisis situations, there's an advantage for stocks. I mean, I was sitting the other day and a guy was coming to me and talking to me, and I guess he'd seen my stuff and stuff. Oh, so you're the guy that does it? I said, yes, I am. And he had an Apple phone. So all of a sudden he stops the conversation. He goes, oh my gosh. And he's looking at his phone. He said, what do you know about cryptos? I said, oh, I know about them, but I wouldn't touch them with a 10-foot pole. And he's looking at it. I said, well, what's happened? He said, they're crashing. I said, well, hey, that's the risk you take. I said, let me ask you a question. You look around this restaurant. How many people have an Apple phone? Well, a lot of people. I said, yeah, about 2 out of 5 people own an Apple phone. Do you own Apple? Oh, no. It's a young guy. Oh, no. That's for your age. I said, really? I said, do you know how much cash Apple has on the books? Now, I'm talking about cash. No. I said, about 220 billion. So here you are checking on something that really doesn't exist with one of the most powerful companies in America. So why didn't you buy some Apple? He kind of ducked his head and walked away. Is it possible that the stock market would have fallen more than 34% in March? Yes. Here's the reason why. We had controls on it. They stopped trading. The Fed stepped in, and the cooler minds came in and said, hey, we're going to start buying some of this stuff back to stop the downfall. But remember, the market closes at 3 o'clock. So all you got to do is make it till 3 o'clock. And believe me, I've been through some of those downtimes when we were wishing it was 3 o'clock so we just stop the bleeding. In cryptos, that doesn't happen. Cryptos are traded 24/7. We call them the 7-Eleven, never close. That is where all this volatility is coming from. I mean, you can have a little Chinese guy working out of a 600 square foot apartment in China trading cryptos in the middle of the night. Now, how do you control that? How do you really know what's going on there? Now, you can make a case that because these markets are global, that therefore it's easier to manipulate crypto during the off hours. Yes, it is. The selling can be cascading sometimes because whatever starts in China goes to Europe, then goes to America, and then starts all over again. It's not the equity market. I don't think people should need the ability to trade all hours of the day. I'll tell you a story. In the 90s, Merrill, when I was there, they came up with this idea that they would have 24-hour trading. We just couldn't believe it because we were old-fashioned brokers then. People called us, we made the trades. So one of the questions from the older brokers said, you mean I need to work 24 hours a day? And, we just couldn't understand that. Well, it never happened, but they thought about it. But you do see that. You can actually trade after hours. And I've always told people, don't buy or sell anything after hours. because it's a very thin market. What that means is there's not much volume. But the crypto guys, they get up at 3 o'clock in the morning and start trading, get out, and then you're not awake and you don't know what to do, and all of a sudden there it is. The last thing, crypto is its own beast. There is no correlation, and when we talk about correlation, we're talking about when one thing zigs, the other one zags. That's how you want to put together a portfolio. But with cryptos, there is no correlation. Now, people have tried to blame, the market went down because of cryptos. The only reason it went down because people are having to liquidate their accounts to cover their margins. It had nothing to do with stock market. So when you're dealing with something like this, and I'm not going to just bash it, I think eventually it may be something. But right now, it's the Wild West out there. I mean, it's a very slippery slope. If you're going to buy something, you're going to invest in it, why don't you understand what it is? I know what Apple is. I know what John Deere is. I know what Caterpillar is. I know what Cisco is. HP, all these stocks. But I have yet to have anyone really give me a good, clear definition, as an academic person I am. What is a crypto? I mean, you get so many different answers, and I've read white papers. I've done a lot of research on it because everybody's asking me about it, and I hope it does end up to be something good. But right now, I've met nobody that can actually explain to me what it is. They said, well, it's like gold. I said, no, it's not gold. Gold, I can drop it on my foot and break my big toe. There is no such thing as a crypto. It doesn't exist. It doesn't jingle in your pocket. You can't go buy something with it or pay something with it. Now, the younger groups say, yes, you can do this, and you can do that. Well, Elon got sharp and said, we're not going to accept those anymore to buy a Tesla because it was too risky. So until this thing really evolves, make sure you know what you're doing. Turn it over to the pros. There are people that are very good managers that understand this, and we have one, that actually can trade those cryptos. But I'll give you a hint. He's been out of it for almost 3 weeks. He went to cash. I talk to him once a week. He goes, I'm lost on what's happening here. And I've been doing this for 8 years. So the old adage is, and what he told me, when in doubt, stay out. And that's exactly what he's done. Well, I hope I got on my soapbox there, but I really am seeing some things here that are concerning me. And it's almost going to when I started writing the book, the 40 years. If you have any questions, call me. If you'd like me to look at your portfolio to see where you are, the number is 817-870-4680. And I'll be happy to do that. So the only thing I can say is from an old TV show is be careful out there. Well, thank you for watching, and I hope you subscribe to this. I'm spent a lot of time putting these things together. And you can find us on Facebook at RileyPrivateClient.com. I would appreciate your comments. See you on the turn.